Welcome to the Big Four Accounting Firms podcast, brought to you by big4accountingfirms.com and the Big Four Accounting Firms YouTube channel. Before we get started, just wanted to remind everybody to support us if you have a chance or if you can. Even $1 helps, and we have a link in the description to a website called Buy Me a Coffee. It's just a way to donate to us and support us. Again, any amount is helpful so that we can keep putting out content. And there's also other ways for you to support us in the show notes to this podcast or on YouTube in the description. In today's podcast, we're going to discuss a couple news stories. First up, we're going to talk about EY. There's a bunch of news about them investing $100 million on blockchain expansion, and a couple news outlets picked it up. And this is most likely because of EY's blockchain conference that we talked about yesterday is going on. And it says that they're going to invest $100 million into engineering and development of distributed ledger technologies. And they've already been working on this. So this is a second generation of smart contract and review tools through their EY blockchain analyzer product suite, including a testing studio, allowing simulated smart contract execution for complex decentralized applications. And they also revealed that an Italian beer company, Birra Peroni, is using its Ethereum-based supply chain solution called the EY Ops Chain Traceability. And Peroni is using the supply chain tracker to validate information and to mint non-fungible tokens, also known as NFTs, to identify and track data for batches of Peroni beer. So we were just talking about blockchain. We've been talking about blockchain and crypto on here, and now we have news coming out of the EY conference, and I encourage people to join that just so they can learn. But we see that the big four accounting firms are investing more and more into this, and right now it relates to consulting, but at some point it's going to be more integrated into audit and tax as well, is my belief, because there's blockchains that are going to be adopted across different parts of the businesses, not the big four accounting firms, but in companies. And then the big four accounting firms will use that to audit or use that for tax purposes as well. So even though we're talking about it in consulting purposes, I'm sure it's going to impact other areas of the big four accounting firms as well. And another thing I wanted to talk about is SPACs, the special purpose acquisition companies. And we talked about this a little in the past, and we talked a little bit about how they're having accounting issues, or how the accounting for it has changed. Well, it turns out that accounting issue for the warrants has resulted in restatements. Bloomberg Tax specifically talked about that, and they pulled their data from audit analytics. And it says that 170 of the 200 plus companies announced that they're going to have to restate this year. 170 of them were the special purpose acquisition companies. And the article goes on to say that this is trouble for, even the accounting firms, because they obviously missed it. And it was a pronouncement from the SEC, and it halted the surging SPAC IPO market because, as you might have noticed, there was a lot of companies that were coming public through these SPACs, and that slowed down a little bit. But it's definitely, and the SPAC was popular because it was a really quick way to go public. But there was this way that they weren't accounting for the warrants, and it's changing the valuation, and it's obviously changing restatements, which means that the big four accounting firms are going to get more fees, because whenever there's a restatement, there's more fees. And I'm sure it's going to change the audits of these things too, where it's going to cost more because there's going to be more risk, not only related to this, but to other accounting pronouncements that are going to come out of that. So, I mean, that's something I wanted to raise, because I encourage people, if there's an area they wanted to get involved, it'd be this SPAC area, because it was booming. And I think it still will, but I mean, there's things that are going to come up like this. And if they're the people that are in the SPAC area now would be getting more work out of this, because you have to go back and redo your work. And I'm sure some clients aren't going to be very happy about this. They might sue the big four accounting firms, but we'll see. But still, a lot of them won't, because even when there's restatements, just regular restatements, a company still keep their auditor. Sometimes they change. We see that when there's scandals, but a lot of times, if it's something like this where it's a regulator providing some insight into a pronouncement, then I mean, a lot of times they'll just keep them, and especially here where it's such a large portion of SPACs that are having to restate. But I thought that was interesting. This is an area that continues to evolve. These are two areas that continue to evolve in the big four accounting firms, an area for people to grow their careers and learn more about. Because I mean, audit is pretty boring. I think most people know that, but there's areas inside of audit where you can specialize and grow your career. Obviously, M&A across all lines of service is a good place, but the SPAC area is another area where you can specialize in. So that's the podcast for today. Stay up to date. Make sure to subscribe to this podcast. Support us financially through the Buy Me a Coffee link in the show notes to this podcast if you can. And if you can't, subscribe to our YouTube channel, Big Four Accounting Firms. Thanks for listening.